You ready to magically be whisked away to a fabulous place, Greg? This is a wonderful location, a spot that I like to call 1064 Lebrun Drive, Jacksonville, Florida, 32205. It is the JWB Rental Income Property of the Week.
Week.
And it is what do we got? A 4-bedroom, 2-bathroom, 1,547 square foot home with a purchase price of $245,000, a monthly rent of $1,613, a completed construction status on this renovation, which you can tell if you see this picture. It is rented. It's got an annual appreciation rate of 4.6% and an estimated return on investment of 11.43%. Check it out. Madison just shared the link to the house in the chat. If you're watching on YouTube or listening on the podcast, go to jwbinventory.com and you can play along. And don't forget that right now we are still in this moment where you can close on a property by 10:15 and JWB is going to buy down your interest rate, drop that by 0.25%. But what's really on my mind is one question, and that's GC. What do you love about this property?
I thought you'd never ask. Well, I'll tell you what I love about this property. Let's take a moment just to recognize how beautiful it is to be able to invest in an asset that is consistent and that beats inflation. Look for assets right now that are consistent and that beat inflation. It's really hard to find them, right? A lot of people have their money in the stock market right now. That's neither consistent nor beating inflation right now.
Yeah.
A lot of people are now putting their money in bonds, right? That is consistent, yet you're earning 3% on your money, 4% on your money, while inflation is 8.5%. That means that you're actually losing. So let's just recognize the beautiful, just the beauty of this. This is an asset that is consistent and that beats inflation. This has over an 11% estimated return on investment. And that means your money is working for you to the tune of 11% year over year over year over year. So there's something to just love about that. Beyond that, I wanted to make a special reference to the maintenance credit that comes with this property. The client who purchases this home is going to have the first $2,400 of upcoming maintenance costs covered for them. And the reason that we do this is we purchased this home. It was tenant occupied. We do an inspection every time we put a home in front of you all and put our name on it. We do an inspection ahead of time, make sure it's up to the JWB standard. And then sometimes what we find are some things that do not affect the rentability of the home today, but it's not up to the standard. And so what we do is we give a credit to the future buyer and say, listen, we're going to fix this. When that resident moves out or whenever that happens, this is what we would do to go ahead and put it to that standard. And then the resident wins. They don't have to be disrupted. The client wins, of course, because they have lower maintenance costs because of this. JWB wins because we're able to put a wonderful investment together where everybody wins and we get to sell a house. So that's something that is really rare. When Pablo purchased, I think all 3 of your properties.
All of them have had rental credits.
Yeah, they all. So whenever we see a property that has a maintenance credit or some sort of credit, like it's really rare to buy a rental property and have money given to you when you buy it, right? I know that was a big part of why we talked about you buying your 3 properties. Mm-hmm. And that's what you have here on Lebrun Drive. It's $2,400 of the first maintenance costs are paid for the client that picks this up. So lots of love here. And then there's the incentive, which Madison mentioned and Pablo mentioned here. This is probably the last time I'm going to mention it on the show, just because I don't want to set up an expectation that people can actually take advantage of it going forward. You know, it's 45 days from now is October 15th. So it generally takes about 45 days for us to actually close on a property. And that's driven mainly by you, the buyer out there, getting your documents together and getting the bank to approve them and all that other stuff. You know, as you start getting closer to 30 days, it might not be possible for you to get it done in time for you to actually take advantage of JWB buying down your interest rate. So if somebody is interested in this one, if you guys will give me the luxury to be a little bit more direct, you should be buying this property today or a similar one today. Put it under contract in the next few days so that you can wind up with JWB buying down your interest rate. Again, you do have to close by October 15th in order for us to do that for you. And that's going to mean an extra $600 a month of cash flow coming to you. And roughly a half a point.
$600 a month?
Sorry, lost my train of thought
Yeah.
there. $600 a year of cash flow coming to you just by us buying down this interest rate, and a 0.5 point to your expected return on investment just by closing on this thing by October 15th.
GC, you talk about these buyer credits as it's like a lock. It's almost like a upside with no downside, right? That's kind of how you've explained it to me. You've explained it to me as, listen, if this resident stays in here and renews a couple more times, that is a couple more times of not having to pay for construction costs, not having to do this while having this in the background. That could just be like a bonus kind of thing. Is that right?
Well, let me go in a little bit more detail, because there's different types of credits that we've seen on properties. Some of your properties have had rent credits, and this one has a maintenance credit.
Okay.
So a rent credit is slightly different. A rent credit means that the home that we are selling is under rented for whatever reason. And then at that point, what we do is cover the difference in the rent. So if it's under rented right here, and then a client purchases the home, and that's not the case here for Lebrun, but let's just use this as an example. Let's say it was rented for $1,550 and the market rent for that is $1,613. Then we would credit the difference for a period of months. And then that just goes straight to you when you purchase the property. In that case, that's where it's really kind of like listen, even if that resident would renew, or if that resident would stay in the home long-term, you're good either way, because you're going to win, right? If the resident renews, they go right up to market rent, but you got a period of months where you got the difference anyway. So in that case, it's really kind of like you win either way. Maintenance credits are slightly different, still really, really impactful, but that's just saying we know that maintenance costs are going to come down the line at some point, right? So how much better of an experience is it for you to have your first $2,400 of maintenance costs not come out of your pocket? So it's a little bit less of like, a really high upside, which rent credits could have a really high upside to them. For maintenance credits, I know maintenance is coming your way at some point. It's just like, this is a great way, a peace of mind, like a much better client experience for you to not have to pay out of pocket when those maintenance costs do come somewhere down the line.
Got it. Okay. Good explanation, man. Good explanation. And we already got a great question here in the chat. We got Raj Bantu asking, there are price cuts on properties in some parts of the country, e.g. Bay Area, Phoenix, Boise, Las Vegas. Are there price cuts happening in Jacksonville?
There are not price cuts happening. What you are going to see over the coming months, though, is seasonality take shape in every market, right? So the question I would have about the Bay Area, Phoenix, Boise, Las Vegas is, if you look over time, how much do properties decrease just due to seasonality in those markets, right? So like, for example, in Jacksonville, from the summer months to the end of December, you lose about 12% of value almost every single year. That's an average over the last however many years, right? So that happens. That's normal. And so I would expect some decrease in pricing to happen just due to seasonality. But when seasonality happens and your home values still appreciate, even though you had some seasonality, that's really kind of what the normal real estate market performs at. So we aren't seeing prices go down macro wise in Jacksonville. You will see some seasonality happen, but the bigger thing is for investment properties like turnkey rental properties, they don't play the same seasonality game. And it's because the owner of the property who is selling it does not have a big motivation to sell because it produces positive cash flow. And so for JWB, or really for anybody in the turnkey rental property space, I wouldn't use this information as a tool for you to go out and say, listen, I'm going to wait until December to go out and try and buy a property from JWB or from another property provider. Because if it's seasonality and they know it's just going to go back up in, March of next year and it's cash flowing, they would have no incentive to take a discount. So there's really no seasonality when it comes to JWB properties. We don't see prices going down the end of the year. When I'm talking about seasonality overall, it's really just kind of like a macro overall real estate trend.
So if I'm hearing you correctly, GC, prices in Jacksonville have not gone down, and you're maybe also questioning whether they really have gone down in the Bay Area or Phoenix or Boise, because we have to really look at seasonality. Or
yeah, I think the right way to look at, is real estate depreciating, is to look historically, go back many years, go back 5 years and see what is the average price decline from July to August. And then if you look at that average price decline, and the decline in that area or in your area is a bigger decline than that, then there would be credence to say, okay, well, maybe really prices are declining, right? It's in Jacksonville, the latest information we have is through July. Home prices actually went up in July from June.
Okay.
So we're waiting to see how it shakes out in August. I would expect prices to decline from a macro perspective in August, because that happens every July through August. I actually ran the numbers on it, and it declines in Jacksonville about 1.6% on average, going back, I think it was from 2018 till now. So it's like, don't get so surprised when you see home prices decline. People are out less looking for houses in the fall and winter months than they were in the summer. So it's normal. So there you go.